Hello everyone. So I'm solving here October-November 2023 paper 2 variant 2, and this is basically question number 2, which is based on manufacturing account. And they're saying here Sarah owns a clothing factory. She sells the clothing to a small number of local shops. She allows 30 days credit. So what does that mean? Basically, when you're allowing 30 days credit, that means whenever you're selling goods on credit, you ask your customers to pay you within 30 days. That is what this statement means here. Then they're saying at 30th September 2023, Sarah's ledger account balances included the following. So they've given you opening inventories, that is raw material, work in progress, and finished goods at the start of the year. I know this because this is 1st October 2022. So these are basically 3 opening inventories of manufacturing account. Then they have given you other information that is also on 30th September 2023. We have purchases of raw materials, we have wages. So we have 3 types of wages here. So they're saying machine operators is direct labor. We know this because machine operators will be given wages according to the number of output they produce. Factory supervisor is indirect factory overheads. So I'll write FOH here. And delivery vehicle driver. So this is very interesting. They have given you a delivery vehicle driver. They are trying to confuse the students. Delivery vehicle driver is a selling expense. It's like when you are selling goods and delivering those goods to customers. That is the amount you'll pay to the driver. So it's an expense, but it's a selling expense, and manufacturing account never ever incorporates the selling expenses. We always have selling expenses in the income statement. So this will not come in the manufacturing account. They're saying then here rates and insurance, which is an expense here. We have to see what adjustment do we have for rates and insurance. Then we have factory general expenses, we have factory machinery at cost, we have factory machinery total depreciation. Total depreciation is at the start of the year. You'll have to calculate depreciation for the current year. Then they're saying trade receivables and cash at bank. Then they're saying additional information. These are 3 closing inventories. So raw material, work in progress, and finished goods. At 30th September 2023, factory general expenses of 335 were unpaid. Unpaid means owing. Owing is always added. So we add this to factory general expenses, 9650 plus 335. So the factory general expenses will be 9985 here. So we write here 9985. Okay, then they're saying insurance of 8,000 had been paid for the year from July 2023 to June 2024. So we should be knowing when are we making our manufacturing account. We are making our manufacturing account on 30th September 2023, which means that July, August, and September will fall in this year when we are making manufacturing. The rest of it, the 9 months that you have paid for from October 2023 to June 2024 does not fall into our current year. So there will be 9 months of prepaid here. So how do you calculate 9 months prepaid here? So how do you calculate 9 months prepaid here? So you do 9 divided by 12 multiplied by 8,000, which will give you the value of 6,000 here. So 6,000 is prepaid. So what we'll do here is we'll subtract that from rates and insurance. So we have rates and insurance of 29,600, and you subtract 6,000 from this. So you get here 23,600. In the 4th adjustment, they are saying rates and insurance are to be apportioned equally between the factory and the office. So factory is manufacturing and office is basically the income statement. Income statement will have office expenses, administration, and selling expenses basically. And all factory related expenses will go to the manufacturing account. When you divide this by 2, so factory related expenses will be 11,800, and basically income statement will also have 11,800 for rates and insurance. Then they're saying factory machinery is depreciated at the rate of 25% per annum using the RBM. So how do you apply RBM? It's very simple. You do cost minus accumulated depreciation multiplied by percentage. So cost here is 80,000. Accumulated depreciation here is 35,000. You multiply this by 25%. So you get a value of 11,250. This is our depreciation expense that will go in the manufacturing account. Okay, so now we'll just make the manufacturing account. It's very simple if you know the format really well. All the factory related costs go to the manufacturing account, and basically you separate the direct cost and indirect factory overheads. So first you start with direct material, that is raw materials, and then you record direct labor. If they are direct expenses, you record that, and then you get prime cost, and then you move on to the factory overheads, which are the indirect expenses of the factory. Then whatever value you get, you basically add the opening WIP, you subtract the closing work in progress, so you get the cost of production. So we'll just simply start this. So I write here cost of raw materials used. So I start with opening inventory of raw materials. Opening inventory of the raw materials in this question is 4875. So I record this 4875. Then I write add purchases of raw materials. Add purchases of raw materials. So purchases of raw materials here is 56,400. So I just write this 56,400. We do not have any carriage inwards on raw materials. We do not have any purchases returns on raw materials, so we don't need that here. So we directly add these both. We get 61,275, and then I subtract the closing inventory of raw materials. So less closing inventory of raw materials. So closing inventory of raw materials here is 5110. So I subtract that here, 5110. So what I get here is 56,165 is my cost of raw materials used. Then I need to add my direct labor. So I write here direct labor. I write wages of machine operators. So we have wages of machine operators as direct labor, and it is 43,300. So I write here wages of machine operators. So wages of machine operators is 43,300. So when I add both of these, 56,165 and 43,300, please note here that we don't have any direct expenses like royalties. If we had any direct expenses like royalties, we would have added it over here before we get the prime cost. So now we'll just have prime cost. Prime cost will be a combination of raw material costs and wages of machine operators. When you add these both, you get 99,465. And this is your prime cost. Then you need to add the factory overheads. So I write here add factory overheads. So I write all the overheads one by one over here. So we have factory general expenses 9985. So I write here factory general expenses. I basically need to write the show the calculation. I need to show the calculation somewhere in my paper. So this should be, it's very good if you write it over here only. 9650 plus 335 gives me a total of 9985. Then I write rates and insurance. And rates and insurance, we did the calculation. It was 29,600 minus 6,000. We got 23,600, and we divided this by 2. So we got 11,800 for our factory. Then we need to write factory equipment. Is it equipment? Okay, it's machinery, factory machinery depreciation. So I write here factory machinery depreciation. I show the working year 80,000 minus 35,000 multiplied by 25%, and I get a value of 11,250 for my depreciation. Then I have factory supervisors wages will always be our factory overhead, but just 25,000 here. So I write here wages of factory supervisor, and I write here 25,000. And I need to see if I have any other expense here. I've taken rates and insurance, I've taken general factory expenses, I've taken depreciation, I have taken wages of factory supervisor. So yes, so all of them are done. We don't have any other expense here. So we'll just add them up, add all the factory overheads, and we'll get a value of 58,035. So basically you need to add 99,465 and 58,035. So you'll get a value of 157,500. Then you need to adjust this value for the WIP. So we'll write here add opening work in progress. Opening work in progress here is 8125. So I need to add this. And you write here less closing work in progress 7365. So you subtract that 7365. So now that the value that you get for your cost of production is 158,260, which is your cost of production. So I write here cost of production. So that's it for manufacturing. It is actually that simple. We'll just move on to the next part here. It says here, prepare the current asset section of the statement of financial position at 30th September 2023. Current assets. So what are the current assets? Inventory is a current asset. We have 3 inventories here. So it is very important that 3 closing inventories. Also, they're clearly stating here 30th September 2023. So you need to take balances on 30th September 2023 only. So we have 3 closing inventories here. We have trade receivables in the question. We have cash at bank in the question. And we have a prepaid expense in the question. That is for rates and insurance. So we'll just record all of this. So I write here current assets. The first thing, current assets are always written in the order of liquidity. So from the least liquid to the most liquid. So the least liquid are always inventory. So you write here inventory, raw material. So raw material inventory here was 5110. So I write this 5110 here. Then we have inventory of work in progress. So work in progress inventory here in the question was 7365. So I record 7365 over here. And then we have inventory of finished goods. Inventory of finished goods here is 13725. So I record this 13725 here, 13725. Then you need to record trade receivables. So trade receivables you directly pick from the question. We have trade receivable here 27,000. So I write it here 27,000. Then we have other receivables. Other receivables is prepaid expense. So actually other receivables are of 2 types. One is prepaid expense and the other is owing income. So if you pay for the future expense, now you'll receive the service. So this is your other receivable. So I write here 6,000. I know from the question that 6,000 was my insurance, which was we had paid for 9 months extra. So we had calculated 6,000. So we record this as 6,000. So we just record 6,000 here as my other receivables. That is prepaid expense for insurance. Then we have cash at bank. Cash at bank, we'll directly pick from the question. Cash at bank here is 1050. So I directly record this 1050. Now I add all of these values. So when I add all of these values, I get a value of 60250. This is my total current assets in this Sarah's business. Okay, in the next part, it's very interesting. I really like these kind of theory questions. They're saying Sarah's factory supervisor is very efficient at running the factory. State which accounting principle Sarah is complying with by not recording any value for this efficiency in her financial statements. So if your factory supervisor is very efficient, that's very good. But you cannot give a monetary value to your factory supervisor's efficiency. So in accounting, there is a principle, it's called money measurement concept. Money measurement concept says that only items which have a monetary value should be recorded in the financial statements. Any item which does not have a monetary value, or you cannot give a monetary value to it, so someone's efficiency cannot be given a value, a numerical value, because efficiency is subjective. You cannot give a monetary value to it. So this is basically not going to be recorded in the financial statements. I write here money measurement concept. Okay, so part D of this question, and this is the last part here. They're saying Sarah has now been asked to supply a local drama school with theatrical costumes. So there's a theater drama school, and over there Sarah is basically given an order of supplying to a drama school. So they're saying the drama school would place an order with Sarah each month and would require 60 days of credit. So if you guys remember from the question, in the first few lines we read that Sarah normally gives 30 days credit to her customers. They're saying here, advise Sarah whether she should start supplying the drama schools with costumes. Justify her answer by providing advantages and disadvantages of supplying the costumes. So here what you guys need to do is that you need to write the answer in paragraphs. So it should be a proper answer, like proper sentences and proper paragraphs. So when you are basically writing, so you can put 2 advantages in one paragraph and then 2 disadvantages in one paragraph, and then give your suggestion. So here advantages, we'll discuss points here. So advantages here are that if Sarah supplies costumes to the drama school, she'll have more customers now. So it's like if you're supplying costumes to a drama school, it's like a big order and you'll have more customers. So that means more revenue and therefore more profit. So if Sarah supplies, so I write here advantages. So I write, if Sarah supplies costumes to a drama school, that will increase her sales, which means she will be able to earn more profit. Another advantage would be that if she starts supplying to one drama school, she may be approached by other drama schools as well. So if she's successful in supplying to a drama school, there can be other drama schools and other such organizations which may approach Sarah for costumes as well. So I write here, if she's successful in supplying this drama school, she might get orders from other drama schools as well. This will expand her customer base. Disadvantages, you need to write it in another paragraph, and you basically write however to move on to the disadvantages. So however, the disadvantages would be that if Sarah supplies to a school, that's like a big order, so she needs more capacity in factory. So if she does not have spare capacity in factory, she'll have to arrange some other factory to actually make these costumes. So that'll be an additional cost. So she to fulfill this order, she will need more factory capacity, and that may bring additional costs. So these additional costs will basically increase the cost of production. So if cost of production increases, there is a probability that her profit will reduce. Also, you can say that if Sarah allows them 60 days of credit, so they have somewhere mentioned in the question that Sarah will have to allow them 60 days of credit. So the disadvantages, one of the disadvantage would be that if she allows them 60 days of credit, if she allows the drama school 60 days of credit, this will negatively affect her liquidity position. So liquidity here would mean that if her customers, the drama school, is paying her in 60 days, that means the trade receivable amount will convert into cash in 60 days, which will actually which will actually worsen her cash flow. So that basically it's the same thing as her liquidity position. So it'll actually worsen her cash flow, and she might not be able to make other payments which are important to her. So I would recommend here that she should go for this order, because this is going to increase her profitability. So she should proceed with this order because this will increase her profitability. So that is my recommendation. You can have a different recommendation. It's completely up to you. So thank you so much for watching. That's it for question number 2.